Welcome to everyone. This week video will cover the SP500, the gold market, and the US dollar. This update will be for the week of December 4th, 2023. Before we start, make sure you read carefully the disclaimer. Let's start with the long-term picture of the SP500. The 18-month cycle. This month high found resistance on the 18 months downtrend channel, from the all-time high in January 2022 high at 4,818.62 and the July 4,607.07 high. A sharp crossing above this trend line will be the first sign of the October 2022 low, could be at least a 54-month low. In any scenario, the October 2022 low is an 18-month cycle low. The next 18 months low for the SP500 is still expected in the first quarter 2024. The question is, how big will be the correction? If this cycle will make his peak this month or next month, then the decline should be moderate, and with a high probability, will find support on his cycle line. The success rate for the 18-month cycle of the SP500 cycle is 100%. Meaning if the trade had been taken on March 2023, after the signal at 4010, the potential profit was 519 points or 12.94% in 4 months. The 40-week cycle. The SP500 keep trading above his cycle line, for now this cycle still bullish. The success rate is 100%. The 20-week cycle. The 4852 target still valid, as long the SP500 stay above his cycle line. The potential profit if trading this cycle is 374 points, or 8.35%. The success rate for this cycle is 100%. To know if the SP500 will meet his target, we have to go to the lower time frame. The 80 days cycle. On the last week update, I was expecting the peak for this 80 days cycle to form around the first week of December. We can expect the peak occur in the next 2 weeks, and the low in the first weeks of January 2024. If trade the 80-day cycle, from the November 3rd signal, the potential profit was an average of 180 points or 4.18% in 12 days. The success rate for this cycle is 100%. The 40 days cycle. Last week I mentioned the 4568 peak could be the 40 days cycle peak. Then the low is expected on November 30th. On November 30th, the SP500 made the 40 days low like expected, right on time. Because the bullishness of the market, the SP500 didn't find support on his cycle line. The SP500 is on his way to form the 80 days peak. The last signal was on November 8th, when the SP500 crossed above his cycle lines at 43.57 and 43.61. For a potential profit, respectively of 253 and 257 points or 5.81% and 5.9%. Today's high at 4,599.39 was off by only 10.83 points or 0.23%. With only 0.23%, the target is considered meet and a good profit in 22 days. The success rate for this cycle is 81.82%. The 20 days cycle. This 20 days cycle low occurred yesterday, November 30th. The next low for this cycle is expected on December 17th. During the next 20 days formation, the SP500 should cross below his cycle line. The success rate for this cycle is 89.47%. The 10 days cycle. The next 10 days low is scheduled for December 7th. And technically, the market should cross below his cycle line. The success rate is 100%. Now let's see the gold market. Just as reminder, to analyze the gold market, I use the GLD ETF. There is no major change on the long-term picture. On the 20-week cycle, the 194.06 target still valid, and the low still expected in January 2024. The 80 days cycle. As expected last week, the 187.68 and 188.70 target zone, provide in the mid-October, have been met this week. If we take the trade from mid-October signal, we will have $10 or 5.3% of profits, in little bit more than a month. The success rate for this cycle is 62.5%. Dollars-wise, all depend if the trade have been made by trading the gold future market, the options market, or simply trade the ETF. The GLD ETF is on his way to form the 80 days peak. The peak will occur on the right part of the cycle, the red dashed line. We call that right time translation. For more details on the time translation, I recommend to watch my series of video on Introduction to Cycles. Because the peak will have a right time translation, we can expect a moderate correction. The cycle lines will be the target support zone. This 80 days cycle low is still scheduled between December 12th and 14th. What's next for this cycle? After the peak, the gold ETF will move toward his cycle lines, finding support on them. Since there is a lots of bullishness in the market, there is a possibility the gold ETF will not meet the cycle lines. Then the market will rebound and resume his uptrend on his way to form the 20-week cycle peak. There is a high probability in the next move the gold ETF will reach his 20 weeks target 194.06. If we took the weekly signal in mid-October, and if the market reaches target, this will be almost $13 or 7% of profits on almost 2 months. The 40 days cycle. This week we have the last week crossing confirmation. The crossing occur at 185.60 for a potential target at 192.09 or $6.49 or 3.5% of profits. Today with a 192.40 high, the gold ETF meet his target. Again, the profits will depend which instruments we trade. The $6.49 is just by trading only the GLD ETF. The next low is still expected on December 14th. The success rate for the 40 days cycle is 100%. Meaning each signals, gave by the market, crossing his cycle lines, have always been meet. The 20 days cycle. November 17th the gold ETF give a signal, by crossing his cycle line at 183.58 for a potential target at 188.01, or $4.45 or 2.42% of profit. This week high at meet and exceed the target. The success rate is 92.86%. This 20 days cycle low is still expected on November 30th, the yellow zone on the chart. At that time the market should cross below his cycle line, providing a downside target. Here the support lines and their potential targets and profits, if the market cross below them this week. The 10 days cycle. On the last week update, I was expected the 10 days low on Friday, November 24th. And the next one November 30th. This low occurred on November 20th, 4 days early. The next low is still scheduled for November 30th. I also mentioned, this cycle low is expected to occur on his cycle line, then rebound and resume his short-term uptrend. That's exactly what's happened. Let's finish this update with the US dollar index. On the long-term picture, the US dollar index find resistance on his cycle line. This could be the first sign of some bearishness coming into the US dollar index. If the US dollar do not cross above his cycle line in the next few months, then the $89 target can be met. The 40-week cycle. This week, the US dollar index trade on his cycle line. For the long-term bullish scenario, it is very important for the US dollar to stay above his cycle line. Any sharp crossing below his cycle line will provide a downside target and will confirm more bearishness coming into the market. And the $89 target is more likely to be met. The 20-week cycle. Last week low at 102, the US dollar index meet his target. This should be the 20 weeks low. Next week, the US dollar index should rebound and move toward his cycle line. This 20-week cycle peak occurred slightly on the right part of the cycle. For this reason we expect a moderate decline. Because on the lower time frame, the cycles run little bit longer, this 20-week cycle is longer than usually. If the November low is the 20 weeks low, then the next one is expected around end of March 2024. But for now, on trading point of view, knowing is this is the 20 weeks low or not. is not very important because, for the short-term trading, the 20-week cycle is too long. The 80 days cycle. If the last week low at 102 was the 20 weeks low, then according to the Hurst cycle's principle of synchronicity, on the lower time frame we start a new uptrend, starting with the 80 days cycle. Like mentioned above, the 80 days cycle run longer than usually. There is a high probability, last week the US dollar formed the 80 days low on November 29th at 102. If the November 29th low is the 80 days cycle low, then the next low is expected on February 8, 2024. During the next rally, the US dollar should cross above his cycle line, confirming the 80 days cycle low, and providing an upside target for a potential profits. If the market do not cross above his cycle line, and use as resistance, this will confirm there is some bearishness coming into the US dollar market. The success rate for the 80 days cycle US dollar is 83.33%. The 40 days cycle. If last week low at 102 was the 40 days low, then next US $40 days low is expected around January 3, 2024. The US dollar should cross above his cycle line and provide an upside target zone. Here are the resistance lines for this week, and their potential targets if the market cross above his cycle lines this week. I don't think the market will cross this week, but in the next few weeks. The success rate for this cycle is 100%. The 20 days cycle. The next US $20 days cycle is scheduled for December 16th. This week, the US dollar should cross above his cycle line. When this will happen, this will confirm the November 29th is a 20 days cycle low. And at the same time, the 40, 80 days and 20 weeks low. Here the cycle line for this week and their potential targets, and the potential profits. The success rate is 100%. The 10 days cycle. This week, the market should cross above his cycle line and provide an upside target. The next 10 days cycle is expected on December 7th and should find support on his cycle line. The success rate for the 10 days cycle is 94.44%. In conclusion, we still have some bullishness in the SP500. The gold market is still in bullish trend. The US dollar should resume his uptrend. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update. If you like this video, don't forget to click on the like button, subscribe and click on the bell to make sure you don't miss any future videos.